Good morning once again, options traders. Well, I've been posting a lot lately about the different resistance levels that we're hitting in the S&P 500. And I've had a number of people email and say, well, what about the Fibonacci numbers? What about the Fibs? Well, there's a reason that I don't like the Fibonacci numbers. So let me show you why I don't talk about them. So first of all, the Fibonacci sequence is just a mathematical string of numbers. It was created by an Italian mathematician by the name of Leonardo of Pisa, but had a nickname of Fibonacci. So it was originally done to show how rabbit populations would grow. But it's been seen in so many different areas of nature. You can see it in the florets of sunflowers, the chambered nautilus shell, pine cones, pineapples. It appears in a lot of different places. So naturally people said, hey, it's got to appear in the stock market, right? So how is this sequence created? Well, you start with 1 and 1, and to get the next number in the list, you simply add the previous two. So how did we get this number? We just add the first two, 1 and 1, we get 2. What's the next number in the list? You add the previous two. 1 and 2 gives us 3. How do we get the next number in the list? Add the previous 2 gives us 5. Next number, 5 and 3 gives us 8, and so on. So obviously this just goes on forever. So here's a shortened version of the Fibonacci sequence, and one of the interesting properties, one of the many interesting properties about it, is that if you divide any two numbers, let's say 89 divided by 55, you're going to get roughly 1.618. And if you do the next two, let's say 55 divided by 34, again, going to get about 1.618. So this number that we're closing in on can be shown mathematically that it's about 1.618034 ... which means it just keeps going on forever. If you actually calculate these out, you'll find that you'll get close but not exact, but it will start to get exact if you were to expand this list way out. Let's say if we put 100 terms on the board and divided the last two, you'd start closing in exactly to multiple decimal places of this number. Now this number right here is called the golden ratio, and this is what the stock traders are getting all hung up on. And one of the things that's interesting about it is that if you take 1 divided by this number, you get just the decimal portion. So if we take 1 divided by the golden ratio, we get just this portion, 0.618034, and that'll be a perfect match out forever. So probably the easiest way to show the golden ratio is to look at a simple line. If you take a line like this and we create a hash mark somewhere in it so that the left portion, let's say here in red, whatever the length is, if we divide it by the remainder over here, it'll give us some number, and that number should be exactly the same as the entire width divided by the red. And that little hash mark right there would be sitting at 61.8, or roughly 62% of the way up the length of this line. So when they apply it to the stock market, they actually work it in reverse. They'll take any two adjacent numbers, let's say 21 and 34, and if you divide those out, we're going to get 0.618, or at least pretty close. And again, that's going to get more and more true as you look further to the right in this list. But divide any two from left to right, you're going to get roughly 618. But then they also skip. They'll skip out to the next one. So they'll look at 21 divided by 55. And you're going to get roughly 0.382. And then they'll skip out 3. They'll look at 21 divided by 89, and you're going to get roughly 0.236. So those numbers that I just showed are what are called the Fibonacci retracement levels. So they're 0.236, 0.382. They also throw in 0.5. I'm not really sure why. It's definitely not a Fibonacci number, but it occurs a lot with retracement levels, at least according to technicians, so they throw it in there for good measure. And then finally we get 0.618. So how do we put these on a platform, and what exactly is it showing us? If you're in the E-Trade platform, it's pretty easy to put on your Fibonacci retracement levels. We're going to click on this little pen down here. From this drop-down menu, we're going to choose right there is Fibonacci. Click there, and then the way that you work this is you find a low point where we had a nice rally, and that where we are starting to retrace. So this might be my low point. I'm going to left mouse click there. I'm going to expand my cursor up to the top, left mouse click, And then you'll see that these are the retracement levels. Look out here. Here's 0.382 or 38.2%. Here's 50%, and there's your 0.618. So what the technicians are saying is that if the market is rallying, and then we get this little pullback here, you're probably going to get some support around the 38.2% mark. And then if it falls through there, you'll probably get some more here at 50%. And if you fall through there, you'll come down here to the 61.8 or roughly 62% retracement. And if not, you'll come back to the 100%. On the way up, it works in the reverse. These levels will become resistance. And so that's really what they're doing, is that they're just using these Fibonacci levels as areas of support and resistance. All right, well, that sounds good on paper and certainly looks good on a chart. So why don't I like the numbers? The reason is that any sequence works. This is just a mathematical kind of a quirk or a characteristic whenever you generate a sequence by adding the previous two. So for instance, today's date is April 23rd. So let's start with April 4 and 23. And if I add those together, next term would be 27, just 4 plus 23. Next term would be 50, 23 and 27, and so on. And if we generate this list, now whenever you're using bigger numbers, you have to go further in the list to get these to work. But if I take 3668 divided by 2267, guess what I get? 1.618. So the first thing to understand about the fibs is that there's nothing magical about the numbers at all. Pick any two numbers. You can even start with decimals. You can use any numbers that you want. And if you generate the next number by adding the previous two, you're going to get the same properties. So then what could we say about the fibs? Well, is it something to do with the golden ratio? That would be the only reason for using it. And what that means is that traders are looking at a stock price, and let's say it does this, and they go, well, that doesn't really look like a pullback to me. It's only, retraced a little bit. That's not really a pullback. I'm not going to buy yet. So let's wait for a while. So they wait and they see it, maybe do this. And they say, okay, well, based on where it started here, this rally, and where it's starting to turn, it's kind of getting there. I still don't think it's a pullback yet. Well, what about this? They say, okay, that looks pretty good. That to me looks like a good place to buy. Well, what are they basing it on? They're saying that this level compared to the top, and if we compare that to the starting point down here, that this gap divided by this is going to give us the golden ratio. So the whole reason for using the fibs is that traders are saying that people are just going to buy at these retracement levels just because of the, let's call it the sheer elegance, the symmetry, the beauty. They're not doing it based on any other reason other than the fact that it looks like a good point. Well, the first problem is that this is finance, it's not art. Now, yeah, I know I teach the art and science of options trading, but not this kind of art. This has no place in finance. But there's a bigger problem, is that you're giving people multiple choices for their answers. You want a 0.236 retracement? If that doesn't work, we're going to look at 0.382. That doesn't work, maybe it'll be 0.5. If not, maybe 0.618. If not, maybe 100. Well, good luck. You're giving people way too many choices while you're in that pullback to try to figure out where it's going to turn. And so, yes, it's a little bit disingenuous to say after it's turned, let's go back and fit the Fibonacci's to it and see how well it works. But when you're in it, you've got multiple choices. We don't know where it's going to turn. So just remember, there are always better ways to make trading decisions than by chance. For those who'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course and Strategy Lab at optionsa2z.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.